Hello and welcome to today's webinar. A little housekeeping before we begin. Everyone is muted during the webinar. All webinars will be recorded and sent out to all the attendees before the webinar has concluded. Tomorrow, the recorded webinar will be sent to all the participants. Feel free to ask any questions during the webinar by clicking on the Q&A box at the bottom of your screen. I may not get to everyone's questions, but we will do our best. I would like to introduce you to Ruben Franco, our President and CEO of the Orange County Hispanic Chamber of Commerce.
Is Ruben on?
Ruben, are you there?
Hello, everybody. This is Ruben Franco, President and CEO of the Orange County Hispanic Chamber of Commerce. Thank you all for being on the call. We appreciate it. We've been a chamber for the last 35 years, helping small businesses throughout the last 35 years, and we want to continue to do that given what's going on with the pandemic and be a resource for all our members and for the community at large. We have a small business development center that we're able to help people with free consulting, and we're funded through the SBA and the Go Biz office of the governor. So we appreciate all that, and we appreciate the partnership that we have with Experian. It's been a great partnership. They provide valuable resources for our businesses and for our consumers, and we look forward to this. It is my pleasure now to introduce to you Veronica Herrera. Veronica's been with Experian for over 18 years, and she's had numerous experience with credit data and scoring models. Her current role is the Director of Product Management within Decision Analytics. Veronica works with lenders of all sizes to help incorporate analytical tools into their decision processes across the customer lifecycle. Over the last 9 years, Veronica has helped educate thousands of consumers about credit reports and scores through Experian's Credit Ambassador program. It's my pleasure to introduce to you Veronica Herrera.
Thank you, Ruben. Good morning or good afternoon, everyone. As Ruben said, my name is Veronica Herrera. I do work for Experian. I am what's considered a subject matter expert when it comes to credit data and credit scores. So I'm in a unique position now to kind of talk through what credit is, credit reports, the kind of information that you'll be seeing. And I also want to talk a little bit closer to the end of this presentation. I'm going to focus a little bit on what's going on right now. I know that there are a lot of questions with regards to credit, thanks to what's been going on with the CARES Act and the health crisis that we're going through, the economic crisis that we probably are just entering. So we are going to try to get through everything as quickly as possible. If you do have questions, please type them in. We will try to get to everything we possibly can. But let's go ahead and get started. Edna, I believe you will be driving. Perfect. I do need to read this. So if you just bear with me for a moment, I need to read this before I get started. The purpose of this presentation is to help you better understand credit reporting and to provide general information about how you can manage your credit report so you can get the credit that you need and want. For legal reasons, I cannot discuss issues specific to your personal credit report. I cannot advise individuals on how to improve their personal credit report or their personal credit scores. I cannot submit disputes regarding your personal credit report on your behalf. Information regarding Experian policies and processes is current as of the date of this presentation, but may change. That's just a legalese way of saying I don't have access to your credit report, so I can't do anything about it, but you can. And part of what we're going to be talking about today is what you can do. The first thing I like to start off with is explaining a few terms. What I have found in speaking to literally thousands of consumers over the last 10 years is that there's confusion about some of the terminology. Credit is confused with debt. Credit and credit reports seem to be synonymous. People don't understand that there's a difference between these terms and what a credit report is and a credit score is. So I'm going to be defining all of these terms as we move forward. So we're going to start with the simplest term, which is what is credit, okay? Because there's a lot of confusion about what credit is. In essence, credit is the ability to obtain goods and services and paying for them later on based on an agreement that you have with your lender. So that can include credit cards, mortgages, student loans, auto loans, personal loans. It can include things like utilities, right? Service contracts, your telephone company, your electric bill. Any lender that is reporting could literally be affecting your credit. But if you think about it, what credit is, it's your financial references. So if you were a student, you would have your grades. If you, as an individual, you have your personal references and all that. This is your credit references, your financial references, because when you apply for a loan, that lender will not know very much about you. They may not know who you are. They don't know how you pay your bills or how responsible you are or not. That's what they're looking for in your credit report. It's, does this individual pay their bills on time? Do they pay as agreed? That's really what the report is about. So credit is that ability to access that. Next slide.
Quick question from Ashik.
Yes.
Does Experian support businesses always against customer credit reporting by them unfairly?
I'm sorry, can you repeat that?
Yeah, does Experian support businesses always against customer credit reporting by them unfairly?
Unfairly, I don't understand what that is. I can answer the question. Yes, Experian has two divisions. We have credit divisions on businesses as well as on consumers, but I don't understand the question about being against them. So they are separate, completely separate business divisions. Perhaps we can take that one offline, because I'm not 100% sure I understand what the question is. But in moving forward, I do want to explain that credit and debt are not the same thing. There are unfortunately a lot of negative connotations to credit because it is associated to debt. All right, it's a mistake to confuse credit with debt, because just because you have credit cards doesn't mean you should take on debt. If you pay your balances off every month, you actually are not in debt. Or if you don't actually owe anyone, but you can take advantage of being able to use credit cards to all the benefits that come along with it. And as you're building credit, as you're using these cards, as you're taking out loans and paying them on time, you're essentially building your credit history. And that credit history can work for you as you need to take out new loans for things like businesses, mortgages, auto loans, etc. If people think of credit as being something negative and something that's to be avoided, which unfortunately we have started seeing in the newer generations, they're afraid of credit, so they're not using it. The problem is that when they need credit, it won't be there. Credit is not an automatic thing. It doesn't just happen the day you turn 18. It is a reputation that you build over time. So by using credit, using it wisely, you build that credit history, so that when you do need to take out a loan for a multitude of reasons, you have that credit reference available for you. Next slide.
To clarify the question from before, said in other words,
yes.
Experian supports businesses, not consumers?
No, that is not correct. We do both. We support both. So if you are a consumer and you come to Experian, you can pull your own credit report, take a look and see what's in there. On the business side, what we do is we provide the information. In fact, that's what I'm going to be covering just now. We provide information on your credit history so that a lender can make an appropriate decision on the consumer, right? By looking at their credit history, looking at the way they pay their bills and the kind of debt that they manage and all that, that they can make the appropriate decision of whether or not to extend a loan. So it's not a us against them type of a situation. It's actually to help consumers get access to loans. In many cases, without credit reporting, most lenders would not be able to have the information necessary to extend a loan. So that's really what we're doing, is we're housing the information so that lenders can make decisions about extending loans to consumers. And One thing I do want to note is that the credit reporting companies, or the credit bureaus as you might know them, like Experian, we don't actually make the judgments about the information on your credit report. We just store the information. So we're kind of like a library, right? We don't write the books. We just kind of collect them, store them, and then allow for that information to be checked out. So a lender could come to Experian and say, okay, I would like to see the credit report of an individual. And if we show them that credit report, they can then make a lending decision. But I do want to clarify that not just anybody can come to Experian, for example, and get somebody's credit report. There has to be, there are a lot of laws that are surrounding this, FCRA, FACTA laws and things like that. But basically, in order to be able to check out this credit report, the company itself must meet what are called the membership requirements from each of the 3 bureaus. And they have to have what's known as permissible purpose under federal law to get that report. They need to show us that proof of that permissible purpose. They have to have a current business license, and they sign a contract with us that requires that business to use the data in an appropriate manner. But let's talk a little bit about what these permissible purposes are, right? Who could actually get access to a consumer's credit report? Next slide. So the permissible purposes under law fall in many categories, but the most commonly used by far is to open and manage credit account. So when you are applying for a loan, it doesn't matter if it's a credit card, student loan, auto, any kind of loan, on the application, you're actually signing, there's the little disclaimer there that will say that you are giving that lender the authorization to check your credit. So you know, be sure to read that. That gives the lender the ability to look at your credit report to make an appropriate decision to decide whether they are going to extend that loan to you and on what terms. And then if they do decide to offer you that loan and you decide to take it and you have now a customer bank relationship, then that permission extends to being able to periodically check your credit report for what's called account management. So they can check it on a monthly basis and a yearly basis, just to kind of make sure that everything is going okay. But other uses of credit are to extend those offers of credit. You've probably seen them in your mail, right? Invitations to apply or pre-approved offers or whatever you're seeing. It's lenders reaching out to you to extend an offer to you. They can use, a lender can actually look at your credit report to see whether or not you meet the criteria that they have placed, that they have for extending that loan, and then send you that invitation. There are some rules around that as well, by the way. So the rules basically say that if they don't get to see your name or address unless you actually meet their criteria, and they will extend some sort of invitation to apply. Then they can get your name and address so that they can mail you that offer. But until then, they only see the anonymized data in order to make that decision. Other uses of credit report could be for employment purposes. There are some jobs that require a credit check. Generally speaking, it's not every job, but some jobs do, especially if you're going to be working around money. They want to make sure that everything on your credit report looks okay. And in many cases, if you're looking for insurance, auto insurance and whatnot, they will check your credit report as well. And of course, any kind of business transactions is initiated by the consumer. And in addition to things like federal jury subpoena or a court order, we would then be required to turn over a copy of that credit report to the courts if necessary. And in other cases, things like eligibility for government licenses and evaluation as an investor, those are other reasons that somebody could be requesting your credit report. And of course, this last one is the disclosure to the consumer. And what that means is that you now have the ability and the right to check your credit report. That was not always the case. Decades ago, the consumer information on a credit report was actually not available to the consumer. Obviously, with the fact that has changed. And now, not only do you have the right to check your own credit report, we encourage it. We are hoping that consumers check their credit report often. And we're going to talk a little bit about that towards the end of this presentation on how you can get to your consumer credit report to make sure that it is accurate, to make sure that everything on there is actually your information, that it is up to date. Next slide, please. All right, so we've talked a little bit about what credit is. I want to talk to you about what a credit report is. So a credit report is sometimes called a credit history. It's simply the record of all your financial accounts and obligations as they are reported to the bureau. So if you go out, you go shopping and apply for a credit card, that credit card, or that store credit card will use your credit report to make a determination whether they can extend that credit to you, okay? And by the way, throughout this presentation, if I say credit report, credit file, or credit history, I'm talking about the same thing. It's that credit report that you have. Hopefully you've all seen it, but it is simply a collection, a record of all the accounts that you have pretty much ever had. There are some exceptions. There is purging rules that I will cover, but it is a record of all the accounts that you have had. Next slide. So why is this important? Okay, so what do lenders use this information for? So a lender, like I said before, may or may not know who you are. So in order to extend that loan, to get that credit card or that auto loan or whatever it is they do, they need to see how you manage your bills, how you manage your credit. If you've ever been turned down for credit, you probably know all about credit reports, right? And that's because if a company ever does deny your application, they are required to tell you how you can get a copy of your credit report. You can see the decision, or you can see the record upon which they made that decision. That is so that if you do see any errors, anything that needs to be disputed, you can. And in just a bit, I'm going to be talking about that dispute process to show you, step you through exactly what you have to do. Is if you check your credit report and you find errors on it, what you can do to fix that. See here. Okay, we talked a little bit about this. So it's very important to have a strong credit history, because in many cases you can get better interest rates, better deals. In many cases, if you are applying for things like utilities and phone bills and that sort of thing, a cellular phone contract, without a good, strong credit history, they could require a deposit, right? So the better your credit history, the better your terms are, the lower your deposits are, you know, and the more likely you are to be accepted to get the loans that you are looking for. All right, next slide. I want to talk very briefly about what's on your credit report. I believe most of you, hopefully, have all seen your own credit report. If not, again, I'm going to be talking about where you can get it. But all credit reports, regardless of whether they come from Experian, Equifax, or TransUnion, they all have the same underlying types of data. The top section, which we call the header, is the identifying information. This is where we have things like what your name, address is, Social Security, date of birth, employment, phone number, anything that's going to be used to help identify you. It is to make sure that when somebody requests your credit report, that we get the right credit report. So it's very, very likely that somebody else has your same name. You might even have somebody with your same name that has the same address, right? So in case of juniors and seniors, you might have the same name with the same address. So it's information just to identify the consumer that we are trying to get that credit report for. I will tell you that lending decisions are not made based on that identifying or demographic information. You cannot be rejected because you know, because of portion. Credit decisions have to be made from the account public record and inquiry section. It's called the trade line inquiries and public records. We call them TIPs. That's the main body of your credit report. This is the history of all your accounts. The section that talks about account information will have a record of any account that you have ever opened, whether it's a credit card or a bank card or a student loan or any kind of loans that you've taken out. It will have the information on those trades. Things like when it was open, what is the total balance, what was the total credit amount, how you paid every month. Did you make the payment? Were you ever late on that payment? What's the amount past due? Those types of things, right? And here you have good information and bad information. It kind of all depends. And again, I'm going to be talking about when this information expires. After the account information, there is a section on the credit report that talks about public records. At this point, the only public record that is going to be found on a credit report is going to be bankruptcy. It used to have others, used to have judgments and tax liens. Those have since been removed from the credit report. So at this point, it's just bankruptcies. There is no such thing as good bankruptcy information. If you have a public record section that is almost always going to be seen as a negative on your credit. So you definitely don't want a public records section on your credit report. And finally, there's an area where we have to record all inquiries. So by law, anytime anyone looks at your credit report, even you, we have to record it. We have to tell you who's been taking a look at your credit report. But the reason I want to call this out is there's this idea that anytime somebody looks at your credit report, for any reason, your credit score goes down, and that is not the case. There are many times when either you or someone else can look at your credit report that does not affect your credit history. I'm going to be talking about the difference between hard inquiries and soft inquiries. So those soft, behind-the-scene inquiries do not affect your credit score. They're not used in credit score calculations at all. In fact, they're not even displayed to the lender. That is for your eyes only, for you to see who's been looking at your credit report. Now, if you apply for a loan and you request that your lender pull your credit report so that they can extend that loan to you, that is called a hard inquiry. That will show up on your credit report. Lenders will be able to see that. And generally speaking, having a lot of those inquiries can be viewed as a negative. It can have a negative effect on your credit score. Primarily, it's because it looks like you might be in some serious need for for loans. So it could be interpreted as a negative. But generally speaking, if you don't request for too much credit all at the same time, it doesn't have a very negative effect on your credit or your credit report. It's just when it's kind of lumped together, grouped together. And again, if any soft inquiries, they don't even count towards your credit score. And then finally, at the end of every credit report is a section that will tell you exactly how to dispute. So you're going to see information on there. Some of it may be outdated, some of it may be wrong, maybe completely wrong. We here at Experian don't know when that information is wrong. If the lender is reporting something, we have to take it at face value. We will check for inconsistencies and things like that, but we won't know if that trade actually does belong to you or doesn't, or if you were or were not behind on a payment or something like that. So we do need you to check your credit report for accuracy and then report to either the lender or to the bureau directly if there's information on there that is not correct. Some of this information can be handled very, very quickly. Something like updating an address or doing something that's fairly simple can be taken care of relatively quickly. Other things, if you're disputing a trade, for example, something on there that is not yours, maybe it's fraud, an account that's not yours, or a late payment that is showing up that you did, you say you were not late. Those are things that you can dispute. And the instructions on exactly how we need that dispute to be submitted will be listed at the end of every credit report. Okay, next slide. Just as important what's on your credit report, I want to talk about what is not on your credit report, because again, there is a lot of confusion about what people think could be on your credit report that actually isn't. So anything that's related to criminal background, the court systems, if it's not related to a bankruptcy, it's not on your credit report. So traffic tickets, any kind of jail time, anything that's along those lines, not on your credit report. Same thing goes with medical information. Just if you went to the doctor, you didn't pay a bill, and that doctor sold it to a collection agency, you might have a medical collection on your credit report. That the credit portion of it, right, the debt part of it might show up in your credit report. But the medical information, who your doctor was, what you went to see them for, all that information is not on your credit report. So nothing that's medically related, just the payment part could possibly show up. Same thing goes with buying habits. So we might know that you have a credit card and that you used that credit card this month to charge up $500, but we have no idea what it was for. So any kind of buying habits or transactional data is not stored on the credit report. Neither is your income, by the way. The income and credit are not the same thing. So income does not actually belong on your credit report. Your lender might ask you about income. They might have a requirement that in order to lend something, to open a loan for you, that you meet a minimum income level. They could ask that, but they will not be able to get that from your credit report because we don't store it. Nor do we store any kind of bank information. So your checking account, your saving account, investments, money markets, any of those things, that's not credit. That's your money. And that does not count towards your credit history. And I want to make a point here. When you're using a debit card, right, so your bank might issue you a debit card, and it might have a Visa logo on it, that does not make it a credit card. That just means that it can go through the Visa processing system, So there's a chip or something like that. But if you are exclusively using a debit card, not a credit card, you are not building a credit history. It is not, your banking information used through debit cards does not show up on your credit report. It is not building credit history. And then finally, and this may surprise some people, we do not store your credit scores. And that's because credit scores have to be calculated at the moment that they are requested. What that means is if I want to understand what your risk level is, I can pull a credit score to see, is this person likely or not likely to pay back this loan? That's what the credit scores are actually, predicting. That information can only be pulled at the time that the lender is requesting that credit report. So there's no point in storing it, because next month you're going to have a different credit report. You're going to have different information on that credit report, and your credit score is going to be different. And lenders cannot make decisions based on old credit scores anyway. They can only make decisions on what's actual, accurate, and in front of them, current on the credit report. Do we have any questions that have come in, Edna?
Yes. First,
Okay.
thank you for your time. I have noticed a drop in my credit score of almost 80 points since the COVID-19 pandemic. I can only assume that it is due to self-employed and applying for several loans, credit card limit increases, etc. Do you know if the government or credit bureau will do anything to help stabilize credit scores as a result of this pandemic? I have signed up with Experian's credit resolution program, Experian Boost. I am in the process of working with the program to see if there is anything I can do to increase my credit score. However, it has taken a terrible hit.
Okay, it is possible that there could be many issues that are affecting your credit report. Your credit score, excuse me. I'm going to be talking about credit scores and what influences them. I can't tell you specifically what's affecting your credit report. I can't tell you whether it's because you requested a lot of loans. A lot of inquiries can affect your credit score. Utilization can, so the more you use your credit and the higher your balances are and the closer you are to maxing out your credit cards, yes, that I will tell you that will affect your credit score. So those are some things that could be affecting it. And we are actually seeing two conditions. We're seeing some credit scores going up and some credit scores going down. And I'm going to be talking a little bit about the impact that the CARES Act and reporting has had on credit reports towards the end of this presentation. But what you're doing is correct. The resolution service is a great way for you to take a look at and understand exactly what is it that is affecting your credit score. The other thing I do want to mention, and I'll be talking about this in a little bit, is that there is more than one credit score, and each credit algorithm is calculated differently. So your score may have gone down for one score, and it may not have gone down or have gone down a different amount for a different score. So you do need to kind of look around a little bit more to see what is it that could be affecting your credit report or your credit score. And a lot of that will have to do with your credit report itself. So in other words, just the fact that there is a pandemic is not what's affecting your score. It's actually credit information as it's being reported. So making sure that that is accurate by checking your credit report is the best way to make sure to help improve that score. That's especially as we start exiting this pandemic period. Any other questions?
I'm not filing taxes. Does this affect credit?
Nope, not at all. That was easy.
If credit card payments are delayed with the permission of the credit card company, does it affect your credit score or recorded in your credit report?
It is recorded in your credit report, but is not recorded as a delinquency. It's recorded as a scheduled payment of 0. That is an agreement that you and your lender would have if you want to. Sometimes they're called payment holidays, right? You can call in and say, hey, I'm having a little trouble making some payments. They understand this is something that a lot of people are going through, and the CARES Act is allowing for this. So that in itself does not affect your credit report, right? Because there's no delinquencies being marked. However, the balances are still there. So that part is still being recorded. It's not like the debt just went away. So that portion of it could be affecting your credit score. But the fact that you are not making the payment that month is not, because your scheduled payment is 0. In other words, you're not expected to make a payment, and your lender will not be reporting you as delinquent. If you see that they are, that is definitely something you would have to go back to your lender and dispute with them. If they agreed not to report you as delinquent and they did, that would simply be an error. But that's something that you can dispute through the dispute process.
I currently have a credit card company. If I request a credit limit increase, does that put a mark on my current report, or will that show up on my credit report as an inquiry?
It shows up as an account review for you, not for the lender, so it's not an inquiry. And by the way, increasing your limit is generally seen as a positive thing for your credit score algorithm. And that's because now you are further away from your credit limits, right? So if I had let's say I have a $5,000 credit card and I used $3,000 of it, I'm kind of close to my limits there. That's high utilization. But if I went and made that credit limit $10,000, now the 3,000 to the 10,000 is a much better ratio. And that would actually help improve my score, unless, of course, I charged it up. If you charge it all the way up to your 10,000, then, of course, that's going to affect your score again. But generally speaking, increasing your credit limit does not put a negative thing on your credit report. It's when you use all of that credit and take out that debt. That is what could negatively affect your credit report.
How long do
okay, well, let's oh,
no,
do they stay on your credit report?
How long do things stay on public records or BK stay on someone's credit report?
So we're going to be talking about that on slide 15. So we'll get to that in just a second.
Okay,
All
great.
right. Can we move on to the next slide, please? I want to make sure we're good on time. We're about halfway through the time here. Okay, I want to mention something. Someone just mentioned something called Experian Boost, and I'm sure you've all heard of it. Experian Boost is a service, a new kind of product that we have developed here at Experian. And I mentioned that is because this is not available at the other two bureaus. This is not a credit bureau thing. This is an Experian thing. And we launched it about a year ago, a little over a year ago, and we're the first reporting company to do this. Essentially, we are allowing consumers, individuals, to actually add information to your own credit report in the form of positive utility and telecom payments. So as you know, many utility companies and phone companies and cell phone companies, they don't report you unless you charge off or you don't pay, right? So they're reporting the negative information, but they weren't reporting the positive information. So we are now essentially giving consumers the ability to record all those times when you actually do make your payment on time, right? So it's a relatively simple process. It is completely based on the consumer's permission. And what I mean by that is you give us permission, you can take away permission. You can say, I want this on my credit report. And if you ever change your mind, you can go back in and say, take this off of my credit report. So this is all totally consumer permission-based kind of information. We did it to help consumers boost their score, improve by adding some positive information to their credit report, but it tends to help people who have very thin files, very young files, or very poor files improve the most. In other words, if I did it, and I did, by the way, it didn't really affect my score very much. I think it took it up about a point. And that's because I already have a very long, thick history. I've been paying my bills on time. I have a pretty good credit score. So it didn't up my credit score a lot. But I have been talking to a lot of people who say that they tried it and 10, 15, 20 points. I can't tell you exactly or guarantee that anything is going to boost your score specifically, because again, it's all depending on what's on your credit report. But we are seeing about an average between 10 to 15 points boost. So it's definitely something that you might want to look into. It is free. It's not something that you charge for. And again, it is completely up to you. If you want to do it, go ahead and do it. If you don't like it, you can request that it be removed. And once it's removed, it will be as if it never existed, completely gone. Okay. So anyway, just wanted to mention that. And if you just go to Experian.com/boost, you will get more information on that service if it's of interest to you. Next slide. All right, we talked a little bit about disputes, right? How do you get this information that's incorrect off of your credit report? And notice I said incorrect. It's not just what you don't like. information that is accurate, that is negative, has an expiration date. That's what we're going to be talking about in just a moment. So you don't have to worry about that. What you do need to worry about is information that is not correct, something that is wrong on your credit report. We have a way to go directly to Experian, and by the way, you do need to go to each of the 3 bureaus specifically to remove this information. And the reason is I don't have access to a TransUnion, or even Experian doesn't have access to the TransUnion or the Equifax credit report, so we can't do anything about those. If you see an error on your TransUnion credit report, you do have to go to TransUnion to get that cleared up. But if you pull your Experian credit report, you have access to that, and you see something that is incorrect, there's a toll-free number that will allow you to call our customer service and to submit that dispute. You can dispute, by the way, you can dispute online too. You can go to a website, you can do it by phone, you can even do it by mail if you wanted to. Depending on which method you use, you're going to be you need to be very specific about what it is that you want to correct. Okay, you need to actually tell exactly which trade is the incorrect one, which value, what is it, what should it be, and that sort of thing. We do recommend that it be a current credit report. We've actually had people who have found very old credit reports from years ago in some drawer, and they call in to dispute, and that information is long gone. There's no need to dispute information that's no longer there. So always try to pull a current credit report, check to see what's incorrect, and if you do find something, initiate a dispute online. Next slide. When you do dispute, right, the information on your credit report, Experian will be acting on your behalf and will ask the lender to verify if the information that they reported is incorrect. Okay? It is done through an automated dispute system. The source of this information is required to copy all 3 national systems if any changes result from the dispute. The law allows the creditor about 30, sometimes up to 45 days to respond to a dispute. Okay, so we normally will tell people it can take anywhere between a month and a half for the dispute to be resolved. But I will tell you that most often it happens much faster than that. Everything is actually automated. Most disputes are usually done within 1 to 2 weeks. Sometimes if it's a relatively simple type of update, it can be done in a few days, okay? Let's see here. I will tell you that if the lender does not respond to your dispute, Experian will assume that you are correct and will remove the data if it's necessary. So they do have a period of time on which they have to respond, and if they don't respond, we will side with the consumer. If they do respond and they actually are able to prove that this is something that is yours, if the dispute is not resolved to your satisfaction, you do have the ability to put in what's known as a statement of dispute on your credit report. Okay, you can actually put a statement on there that explains the situation verbally. Next slide. All right, so somebody asked, how long is information kept? Any account that's still open and is in good standing, it'll be on there for as long as you have your credit history. If you still have that same account that you had when you first opened up, let's say when you turned 18, it'll still be on there. Eventually, if an account is closed, either a credit card is closed or an installment loan that is paid off, it will stay on for another 10 years, and then it will eventually drop off. So the accounts will stay on either indefinitely or up to 10 years after being closed. Any late payments, missed payments, those negative things, they generally only stay on for 7 years. So if you've missed a payment 7 years from that date, it will drop off. Actually, it drops off a little bit before that. But by 7 years, that information should be gone. So if you see anything on your history that's related to something before 7 years, then you know that's easily disputable information. Now, collection accounts can also stay on for 7 years, but they do not start anytime the collection agency buys that loan. People do misunderstand that. They think that anytime a collection agency buys a debt, that the clock resets. It does not. Collection accounts are removed 7 years from the first time you went delinquent on that account that led to the charge-off, that led to the collections. So when that date is hit, everything, the late payment, the charge-off, and the collection accounts all come off at the same time. And it's 7 years from that first time that you were late that led to that collection account. That's when the clock starts, not when the collection agency buys that debt, okay? Bankruptcies, depending on which kind of bankruptcy, will stay on either 7 years or 10 years. So bankruptcy 7, which is the full bankruptcy, will come off after 10 years. And bankruptcy chapter 13, which is the restructure of debt, that actually comes off after 7 years. And credit inquiries only stay on for 2 years. Actually, it's closer like to 23 months. That's when they start popping off. So you don't have to worry too much about credit inquiries because they have a much, much shorter lifespan. Okay, next slide. Let me go in a little bit faster now because we do need to get to the good stuff, which is all the COVID-related stuff. All right, so let's talk a little bit about a credit score. We've talked about credit, we've talked about credit reports. Now we're going to talk about a credit score because they are not all the same thing. A credit score is a mathematical algorithm. It is a predictive algorithm that can look at the information that's on your credit report and generates a score that is associated to the likelihood that you will default on a loan. And default is defined as you're not gonna pay that loan for 90 days or more. Okay, so that could be 90 days, 120 days, it could be charge off, it could be repossession, it could be bankruptcy, it can be collection accounts, all those things that are basically that the account is now closed and no longer for service. That is what it's looking for. How likely, are you very likely or are you very unlikely to default on that loan? And it's used because trying to understand and interpret the information that's on your credit report is a slow and tedious process. It requires somebody to go through every aspect of your credit report and make a determination of how likely you are or not to repay that loan. Whereas an algorithm can do it unbiasedly, right? So it's just purely mathematical. It can do it in a consistent, unbiased manner, look at all the information that's on your credit report, weigh it all out, and give the lender back a probability of default. What is the likelihood that this consumer will default on this loan? And that score, right, you've probably seen them. You've seen FICO scores, Vantage scores, all kinds of scores out there. Most of them, not all, but some of them have a range between 300 and 850, where the higher the score, the better, the lower the score, not so great. But I do want you to be aware that there are many, many, many different models out there. Big banks use their own models. A lot of banks use FICO, a lot of other banks use VantageScore. You might have seen them on sites like Credit Karma. You might get them from your bank account statements. You're going to see a lot of different scores. They are not all the same. They are actually all different algorithms. But generally speaking, most risk scores, because they're calibrated to look for the same kinds of things, most of them function in the same manner. But you will see differences. If you pull 3 different credit reports or 3 different credit scores, you will have 3 different numbers. Sometimes they will be close, sometimes they will not be close. It all depends on what's the data that's feeding that model and what the model is. So I guess my point here is don't fall in love too much with any particular score because it can change. It will be different whether you pull it from Experian or Equifax or TransUnion. It will depend on whether you're pulling a FICO 2, a FICO 8, a VantageScore 3, you know, any number of other models that are out there. They're all going to be slightly different, but they all do the same thing. And they're just looking to see how likely you are to default on a loan. Next slide. So if all these scores are different, how do you manage it, right? How do you figure out what to do about it? And that is the key factor here is in what we're calling risk factors. They are also known as adverse action codes, score factor codes, reason codes. Depending on who the lender is, they'll have it written in different ways. Basically, by law, anytime a credit risk score is calculated, and if you are either turned down for a loan or you're not given the best possible terms, that's what's considered adverse action. We need to tell you what those risk factors are. What were the top 4 reasons why your score was not as good as it could be, right? What was driving your score down? The important thing about these risk factor codes is that they are in order of importance. When they are being delivered to you, you will see 4 codes. That's what the law requires, 4 to 5 codes. You will see them rank ordered by the most important thing on the top and then going down. The truth is that there could be 25 different things that are affecting your score, but we're going to give you the top most influential reasons. And the reason you do that is so that you know what to address. So when you look at that top risk factor, it might say something like, you have a late payment, or your balances are too high, or your utilization is too high, or you don't have a credit card, or your credit report is too thin or too young. There are many different reasons. The way you improve your score is essentially you do the opposite. You fix it by addressing which one it is. So if it says you have a late payment or an outstanding balance on a credit card, the way you help fix that is you go and you pay off that credit card, bring it up to current. If it says something like, your credit account is just too new, well, unfortunately, only time can help that one. But every month that goes by makes that one a little less influential. If it says your utilization or your credit card balances are too high, or your installment loans the balances are too high, then the way you fix that or you address that is by paying down those loans, improving your utilization. Each time you pull your credit score, you might get different score factors. You might get the same, you might get different. Every time you do, just address the top 2 to 3 to 4 reasons, and over time, your score will improve. For the person who asked earlier, saying that their credit score was dropped recently, I would definitely pull your credit report, look at those top 4 factors, pull your credit score, I should say, not just your credit report, but get a credit score and say, what are the top 4 factors? What is it that is affecting it? It might say, you've been requesting a lot of new inquiries. If inquiries is way up there at the top, then that is that is something that's influencing your credit score. But it also might be that your utilization is getting higher, that your balances are getting higher, that sort of thing. So address it by looking at those score factor codes. Next slide. Many scores, like I said, there are many scores out there. I'm talking hundreds, maybe even thousands that are out there. Most scores, though, do look at very, very similar aspects of your credit report. So while I can't tell you what FICO's formula is exactly, I think FICO's website has a similar pie chart to this. I do know what's involved in the VantageScore 3.0 model, which is one that's pretty heavily used. And like most credit scores, payment history, in other words, whether or not you've been making your payments on time, whether you have late payments or you're paying them on time, is one of the most influential things. And what that means is if you are 30 days late, 60 days late, or 90 days late, it will ding your credit, and it'll ding it hard. It will. It's not a trivial thing. Having late payments is one of the the highest indicators that you're going to default on that loan. So please make sure that you always make your payments on time, even if that means setting yourself up on automatic payments so that you don't even accidentally miss a payment, right? Because that can happen too. But just as important, the fact that, hold on one second, I'm gonna have to switch here. Can you still hear me? Edna, can you hear me okay?
Yes.
Okay, good. Sorry, just my headphone just died on me. Just as important as credit payment history, you will see that while that is very influential, it is not the only thing that affects your credit score. I do get asked all the time, how can my credit score be low if I've never missed a payment? Because that's not the only thing that influences it. The fact that you've made your payments on time will definitely help, but you also have to look at the utilization or depth of credit, your balances. That accounts for 50% of your score. And what that means there is if you have very, very high balances or you're using up a huge percentage of your credit, available credit, that is going to negatively affect your credit score. You want to be careful of that. Depth of credit revolves around 2 things. That means how long you've had your credit and what kinds of credit you have on your credit report. So if you only have one type of account, let's say you only have student loans, for example, or just have an auto loan or something like that, that's not enough credit history. That's not deep enough. You need to have some credit cards, some installment loans. One of the best things you can have on your credit report is a mortgage, right? So, because that means that some lender was really willing to put their money out there for you. So it's definitely a good thing to have a mortgage. I should caveat that, a mortgage in good standing on your credit report, because that can definitely help. But if you'll notice, things like recent credit or available credit, recent credit really revolves about newly opened accounts or your inquiries. As you can see, relatively small percentage. So having a lot of inquiries or having inquiries on your credit report will affect your score a little bit, but not significantly. Having a late payment, now that is going to affect your score. Having utilization above 50%, that is going to affect your score. So just be careful and cautious about managing the overall utilization, balances, and history on your credit report to make sure that that score is looking good. Next slide. Basically, I just wanted to tell you that most of the things that are going to be fixed on your credit report, it's just going to happen over time. Look at those risk factors, address each one. Next slide. Sorry, I'm going quickly. I want to get to the information that's most relevant, which is the COVID stuff. If you need to get your credit report, you can go to annualcreditreport.com. That is a free website where you can access your credit report for free. At this point, or I should say, it's a little different now, thanks to the CARES Act and the COVID. It used to be that this was the site that you can go to, that you can get one free credit report from each of the 3 bureaus every 12 months. Okay, you can go online, you can do this, you can do it through the telephone, but you will get a free, completely free credit report at least once a year. I'm telling you now, we've changed that, and during this COVID period, we're actually allowing you to go and get it every week. You don't have to wait a year. You now can get it every week. Please do be aware, though, that the free part is just the report. They will offer you to see if you want to buy your credit score. Your credit score disclosure is a different thing. There is a fee for that. And quite frankly, I don't even think you need to, because there's plenty of places you can get a free credit score. But this is for a place you can get your free credit report. Next slide. Here we go. This is what I wanted to tell you. Now during this time frame, at least until next year, the 3 credit bureaus decided that we are now going to let you go to your this website and get weekly updates. I do want to mention something though. When you make a correction to something or you make a change, you've asked your lender to give you a payment holiday, whatever you're doing, it doesn't happen instantly. So while checking your credit weekly is probably a good way to keep up informed, please do understand that reporting is done on a monthly basis. So it may take up to a month for you to see some information, even if you've agreed with your lender. Let's say they've decided that you don't have to make a payment this month or this month and next month. They're going to make your scheduled payment 0. That may not show up for a while until the next reporting cycle. So while I agree that checking your report weekly is a terrific thing, just be aware that week to week, your credit report may not change as much as you think it is, but it is a good way to keep up on what's going on with your credit report. Okay, next slide. I'd like to talk about things that are more specific to your credit regarding this particular time, okay? As you know, the CARES Act was passed back in March, I think, the end of March. And there's a lot of things that are going on with it. It's a pretty big document. I've actually read it, and I read the part that's related to the to consumers and credit reporting. But basically what's happening is we're in an economic downturn right now. There are situations where people cannot work. For many different types of people who cannot go to work. A lot of service industry people, just people getting laid off. This is not a great economic time. They're going through a lot of difficulty. And a lot of this has nothing to do with, people are not at fault here. So the CARES Act and what lenders are trying to do is trying to help consumers figure out what they need to do. You could call in your lender and work something out. I want to mention here something, though, that this is not an automatic thing. People that are familiar with the CARES Act think that this is automatic, that the credit reporting agencies and lenders are just going to figure this thing out. You actually have to initiate that call. You have to talk to your lender. Call your lenders if you're going to have trouble making those minimum payments every month. Work something out with them. There are many things that are available to you. I can't tell you which ones the lenders are going to give you. I don't know what your current situation is, but there are things like deferments, forbearance. That's when, for a period of time, you don't have to make payments. They won't be reporting you as delinquent during this time period. That is one of the kind of conditions of the CARES Act. But that account may still be due. Many of these lenders are simply going to change your scheduled payment to 0. And that's fine. And they will not report delinquencies, late payments, or anything like that. But you do need to initiate this. It is not automatic, by the way. If you call one lender and you talk to them about one of your credit cards, it does not automatically extend to all your other credit cards. If you need to get extensions or assistance from any of your lenders, you need to call each one of them individually, and they can do something by, it's a little mark on the credit report that says affected by natural or declared disaster. That means that you are in a special kind of position right now where the lender is agreeing to work with you during this time frame. Okay, so it is important that you actually reach out to your lender. Next slide, please. Sorry, we are quickly running out of time. There's a few terms that I do want you to know that you are going to hear, and there are distinctions between them, okay? You will hear the word deferment, forbearance, and there are also some other conditions that are not credit related, but things that you should probably know. The difference between a deferment and a forbearance is a deferment is an agreement between you and your lender to temporarily suspend those payments, okay? Think student loans, for example. But deferments can apply to other loans other than student loans. It's just the student loans tend to be the most common. A forbearance is when you reach an agreement with your lender, usually after you've been paying, where you can either pause or reduce some of your payments. So think mortgage payments, auto payments, and that sort of thing. You can also do forbearance on student loans, by the way. Sometimes interest will still accrue. In fact, many times it will. But again, that's something that you need to work out with your lender specifically. What are the arrangements of the temporary assistance, or what's known as an accommodation during the accommodation period? You are, I believe, thanks to the CARES Act, you are allowed to use some of your retirement accounts to help kind of bridge the gap during this time, especially if your income is being affected. You can make some withdrawals. This is not credit related, so I'm not going to get too deep in here. This is something that you should definitely talk to your own accountants, because there is a time frame where you need to pay back that money in order to not have to deal with penalties and that sort of thing. But that generally that information is going to be available to you through your accountants. Next slide real quick. I want to bring to your attention that during this time, fraud is going to be high. Please be aware, please be very, very cautious that, especially through your emails, maybe even through your phones, you're going to get information. Things are going to happen now. You need to be aware of it. You need to initiate your connections with your lenders directly. Do not trust any emails, texts, or things that are coming to you that you are not completely aware of. There is going to be a lot of phishing, phishing emails, text messages now, all sorts of things that will promise you many different benefits. It doesn't necessarily mean that all of them are scams. You need to figure out where you need to go by talking to your lenders directly. Excuse me. There is a link here that you can go to that talks about these scams specifically, because we won't be able to cover them all, unfortunately. But just be aware that that fraud is actually going to be higher during this time. It is, oh my goodness, we have 1 minute left, and I'm imagining we probably have a ton of questions. Is that correct?
Yes, we have about 50.
Oh my God. Oh dear. Well, I have a few minutes if we can answer just a few. I think what we should do is take those questions and see if we can't maybe write out some of those answers and get some questions back to, or answers back to some individuals. But are there some that you might be able to read off to me right now, Edna?
Yes. So will any of the deferment or forbearance programs being offered and used due to the pandemic have an adverse impact on credit scores?
It can. It depends on the credit model itself. So some credit models may look at deferments and or forbearances as a negative. That is based on the algorithm of the model itself. I know things like, for example, the VantageScore. The VantageScore does not. They changed their model, in fact, so that having a forbearance does not have a negative effect. But I can't guarantee, I can't tell you if all models, like I don't know how FICO's models are that each client uses, but so it might. But again, what I would do is look at those score factor codes to see what's affecting your specific score. So if it says, hey, you have a forbearance and that's what's affecting it, then it is possible that that model is being affected by that forbearance. Another question?
As a small business owner who applied for relief under the SBA EIDL and PPP programs, SBA has conducted inquiries on my credit file. How will Experian be tracking the loans my company has been approved as personal credit or business commercial credit history? Thanks.
Okay, I'm assuming that you are talking about your consumer credit report, because there can also be a business credit report, which is handled completely differently and separately. So inquiries based off of loans that you are inquiring about, those can be recorded. And if you have a lot of them in a short period of time, it could possibly have a negative effect on your credit report. You do need to kind of be careful of that. But although most inquiries and many credit scoring algorithms do take into account the fact that multiple inquiries are actually rate shopping, right? So it's like, for example, you probably know that when you apply for a mortgage and you apply to 5 different lenders, you're not taking out 5 different mortgages. You've got one mortgage. You're just asking many lenders to give you a better rate. A lot of models take that into consideration and roll those up. It's a process called inquiry deduping, where multiple inquiries in a short period of time are counted as one, not as the individual counts. I couldn't tell you specifically if your model dedupes against small businesses, because I don't know which model you are referring to, but it is possible that having multiple inquiries, even small business loan inquiries on your personal credit report, could drive your score down. It generally does not drive it very, very deep. It's not the most impactful thing on a credit report. The most impactful thing is late payments, not making payments. That's by far the most impactful thing, as well as bankruptcies.
Okay. Veronica, this is Ruben. Okay, so I'll ask you the next question. What's the difference between a soft inquiry or a hard inquiry?
Sure. A soft inquiry is these back-end looks at your credit report, where you as a consumer can look at it, your lender can look at your credit report on a periodic basis, other lenders who are thinking about offering you extending an offer to you. Those are all inquiries where people look at your credit report where you didn't necessarily give them permission. Those would be considered soft. They are there for your view only. Lenders don't see it. They are not affecting your credit score. Credit models cannot see it. Hard inquiries are when you specifically ask for a lender, hey, you can check my credit report for because I want to get this credit product. That is a hard inquiry. A lot of those could negatively affect your credit score, and they are reported on your credit report. You will see them, and your lender will also see them. So that's the difference between a hard and a soft inquiry.
Great. Has the credit scoring system changed at all recently?
No, models that existed before this pandemic are pretty much the same. I do know that some of the models are updating their algorithm to better deal with the situation that's happening. I don't know that all models have. I just know, for example, because we work here, the VantageScore model has actually been updated recently to help with consumers that are being affected specifically by COVID. But in general, no, I don't think all models have been updated.
Okay. The 30 to 45 day disputes, is that business days or calendar days?
I believe that is calendar days.
Okay. What is considered good credit versus excellent credit?
That is up to each individual lender. It depends on what their risk credit thresholds are. In other words, for a normal, a middle of the road, they could say, oh, a 620 is fine for you to get credit, right? Other types of lenders, as well as types of accounts, require extremely good credit histories, very, very, very low default probabilities. So I can't give you an actual number, but maybe point to, generally speaking, scores above 780 are usually considered excellent. Not always. You could still have some lenders that require an 800 and above, for example, or whatever their scale is. But generally, 780 and above is considered excellent. and anything from like in the mid to high 600s to 700s, the high 700s is considered good. But each lender has its own criteria. Be aware of that.
Okay. This question is related to an SBA loan. The SBA conducted 2 hard inquiries against my credit file within a 1-week period.
Mm-hmm.
Can I challenge one of those inquiries or have it removed?
They were done on different days, so you can challenge it. But the thing is, it's there so that you can see that happened. They won't count as 2; they're going to count as 1. It's there so that it's a record to make sure that you see who's looking at your credit report.
Okay, so it only counts as 1 inquiry, though.
Mm-hmm.
Okay, well, that's
yes,
good.
Exactly. When you look at the models, it's going to see that there's 2 within a day or whatever. It's not 2 separate loans. It's 1 inquiry. That's the deduping process.
All right. Are there any ways to raise your credit score in a quick and dependable way?
Quick, generally no, unless the top thing on your credit report is your utilization or your balances. If the number 1 or number 2 conditions on your credit score is utilization and balances, the quickest way to improve that is by paying down those balances, paying them off if you can, or at least getting them below 30% utilization. Most other things require time. It's not a quick fix, but bringing down balances and your utilization is the fastest way to improve your score.
Okay. How will my credit score be affected if I freeze my credit?
If you freeze your credit, then no one will be able to look at your credit report, so there will be no calculations of your scores. It will take away your score.
Okay.
Freezing your credit is when you basically don't allow anybody to look at it. So if you applied for a loan and your credit is frozen, you're going to be turned down for that loan because they won't be able to access your credit report. So use it sparingly, I guess, is my point here. You can freeze your account, but if you're going to be looking for credit soon, freezing it is probably not the best idea because you will be turned down.
This was related to somebody buying a business truck for their business, and the dealer ran their credit 28 times. Yeah. Is that considered 1, or is that still, why would a dealer run a credit report 28 times?
They do not need to do that at all. Yes, it would be considered 1 under the credit model, but that is definitely something that I would go back and take a look at, because that doesn't make any sense. That sounds like a system error where they kept hitting submit, submit, submit. It just that is not a good idea.
Right. Can you dispute a late or missed
payment? But it will
payment?
still be rolled as well.
Okay, sorry.
Can you dispute a late payment?
Just a late or missed payment if the creditor did not file the payment correctly, and if so, what is the process for disputing it?
Yes, you can. You would submit that dispute and give all that information to the dispute process. As much detail as you can. If you have anything that shows where the lender agreed to do something, when that payment was received, when that check was cashed, whatever you have, that's the kind of information that they're going to be needing.
Okay. Is your credit score penalized if you do not use a credit card and want to terminate it?
Yes, your score can go down if you close an account. If you do not use your credit card, eventually that lender will close you because you're not making them any money, right? If you're not using their card, they don't make any money. So every lender is different, of course, but let's say you don't use your credit card at all for 2 years, eventually they're going to close you. When somebody, whether it's the lender or you, close an account, that immediately affects your utilization because now your balance to credit limit ratio, the percentage that you've used of your credit, gets closer now because you've now just reduced the available credit that you have. So every time you close an account, your credit score could technically go down a little bit. Of course, that varies. If you have a ton of credit, closing one is probably not going to make any difference. If you only have 2 credit cards and you close one, that's going to have a much more deep effect on you because it depends on what else is on your credit report. But yes, closing accounts can affect your credit score.
If you go to a credit reporting company they tell you they can clean your credit, they can remove a BK, is this legitimate? Are these companies for real, or is that, are they getting the,
Yeah.
I don't know what your feedback
That
is
is
on
not
that.
a credit reporting company. Yeah, that is not a credit reporting company. Those are credit repair companies, and I would recommend that you do not. There's nothing that they can do that you can't do yourself. Okay, all they are doing is they are charging you for disputing on your behalf, and they charge you a ton of money for something that's absolutely free, and you probably have way more control over. I'm not going to tell you, if you want to have them do it, you can. It's a very expensive process, but it's not anything that you couldn't do all on your own. Free
Okay.
and relatively easily.
What are the ideal utilization rates for credit cards, home loans, car loans?
Mm-hmm. Perfect. 30% or less is the ideal for revolving trades. For installment loans, the lower the better. Obviously, when you first open an account, you're at your maximum, and it keeps going down, so it will get better over time. And usually once it starts falling below the 50% mark, you start seeing some good improvement. But for revolving trades, that's really where you're going to see the most impact, and it's 30% or less is ideal.
Okay, and how are you with time right now? We're at 12:11.
Give me 1 second. My next call was pinging me. Let me just tell them that I'm going to be a little late. There we go. Okay, go ahead.
Okay. Now, this is another question. Might be related to other
Sure.
companies working with your credit. Because what about companies promising to raise your score? I heard, other than Boost from Experian, are there
Mm-hmm.
companies out there that are outside Experian and others claiming they raise your score or can raise your score?
Yeah, they can claim it, but unless they do anything, they can't really do it. So what they're going to be doing is if they could be disputing certain trades, okay? But please remember that when somebody disputes one of your trades, it doesn't get rid of the negative information, it gets rid of all the information. So disputing a trade can go, especially a trade that actually does belong to you, could have a negative effect. I had a consumer who once decided to improve his score. He was going to dispute everything that was on his credit report because he thought it just suppressed the negative information. It suppressed everything. The guy literally wiped out his credit report for a period of 30 days. There was nothing there. He disputed everything. That is not the way to do things. If you're really, really interested, and I suppose you could ask them how they would do it, but I can't imagine that there's anything that they could do. They can't add things that are incorrect. They can't take away things, anything other than a disputed element, and disputing it is not going to necessarily raise your score. So, you know, I've often wondered what exactly they're promising, because I can't think of any way that you raise your score other than, yes, adding Boost can slightly raise your score, and lowering your payment, or upping your payments and lowering your utilization, that can help raise your score. But other than that, it's really a matter of time.
Okay. We have like 2 more questions here we can ask.
Sure.
Why, when you pay off an account in good standing, your credit score drops instead of going up?
That is not correct. It can go down or it can go up. It depends on what else is on your credit report. So that is not a statement that can be made across the board. If an account is closed, even if it's in good standing, it doesn't. It's not included in your utilization anymore. Actually, it affects your utilization. So it is possible that closing an account, even in good standing, could temporarily lower that score. But generally speaking, if you close let's say an installment loan in good standing, that won't negatively affect your score. So it depends on the situation. But occasionally, if you close, especially a revolving trade, the reason it's affecting your score negatively, if it does, is because you have now changed your utilization ratio. You've made it a little closer, which means your balances are now closer to your limits, and that could be affecting the score.
Okay. I got a credit inquiry from the SBA, but no loan yet. I did not know my credit would be checked. What does the inquiry mean?
The inquiry means that somebody took a look at your credit report for the purposes of taking that loan. There is a lag between the inquiry and the extension of the credit. So that's the time that they're doing to take to determine whether or not they're going to give you that loan. So you might get an acceptance or a rejection letter.
Right. And we've been finding that too. We have had a lot of clients who their credit's been pulled by the SBA, but no loan yet because the loan process is swamped right now, as everybody kind of knows. But that's been kind of the standard for right now. So, well, we still have a few more questions. What we'll do is we'll consolidate the questions and send those over to Veronica, and we'll get them to everybody who was on the call. And we'll be doing another webinar like this in the future. I really want to thank Veronica and Carol Urton from Experian for their partnership. You were great, Veronica. Thank you very much for your time. We appreciate it.
Absolutely. Thank you.
All right. Everybody have a great day. Thank you.